I know it was just a few months ago that, Arnie, I sat down with you, we talked about the market, and by the way, congratulations on the sale of your, the announced sale of your Genesis Healthcare Properties to Healthcare REIT. That's a great deal, but it's unbelievable what a difference just a little bit of time can make, can take. I remember not too long ago, everyone was freaking out, there was no capital, there was no liquidity, and then bam! In less than 6 months, we've got $20 billion of announced transactions by healthcare REITs. What changed?
Well, first, thank you, Steve. Boy, I guess, you know, the marketplace for the REITs essentially changed dramatically in terms of their ability to not only access money and raise capital, but their willingness to utilize both the RIDEA structure and to expand upon their current platforms of sale-leaseback activity. It seems almost as if it's become a horse race, in that you've got 3 or 4 large, well, I would have said 4, now it looks like it may be down to 3, large REITs that have a voracious appetite to invest in specifically senior housing. And I think a lot of it is around the fact that both the analysts and the investors out there find the industry attractive from a historical standpoint, and they find the industry attractive on a go-forward basis with all the compelling dynamics as you look at the demographics and just the amount of capital being consumed by the elderly population today. You know, it's almost mind-boggling though. I'm not sure there's any real easy answer as to why it's exploded as much as it has, but well, it sure feels good.
Yeah, it's obvious that there's a little bit of a land grab going on there now. You know, you have on the skilled nursing side, HCR ManorCare and your Genesis properties. On the senior housing side, you've got Atria, Benchmark, Brandywine, several others, Merrill Gardens. You know, high quality portfolios that these REITs are going after. You know, are there many more of these kinds of higher quality, large entities that you think may be available for the REITs?
You know, I think there are a few, but I think also your point about the grab at these high quality operating businesses is the key point, and sort of answers your last question, which is if you are a real high quality operating business today, and you have a growth plan that is meaningful and sustainable, the REITs are now in a position with this new RIDEA structure and the TRS structure to really become a hybrid investment strategy that is not just real estate as it's been in the past, but really a sort of a hybrid real estate corporate investor. It gives them the ability to really surpass, in my opinion, the private equity investment houses and private equity in general, because their cost of money is so low, and the ability to bifurcate the operations and the real estate in such a way where the growth comes from the operating businesses, the real estate pays the dividend, and you've got a real marriage of both a real estate and a corporate play.
But do you think the REITs have unlimited demand right now?
Unlimited demand as it relates to
acquiring companies like this?
I think they'd like unlimited demand.
I mean, do they have unlimited demand, not the supply?
I think they have a very voracious appetite for growth. Okay. And I will say it concerns me a bit that the growth is sustainable.
Now your transaction, I know with SEC issues you can't go into it, but yours was not the so-called RIDEA, it was a traditional sale-leaseback.
Correct.
But do you think that with these RIDEA type transactions, is that what is generating the interest level from the sellers?
Well, I think it's enabling the REITs to pay the higher price, and therefore it becomes more attractive to the sellers, yes. And it also gives the seller the ability to continue to operate the business and grow the business and participate in it in a meaningful way.
And then 3 of these recent deals involved as sellers, you being included, private equity firms or quasi-private equity firms. Do you see them being able to get back into the market as buyers again, or are they just going to be outbid by the REITs?
I don't think the larger private equity firms right now can compete with the REITs. I just don't think I don't think they can. I don't think they can get the kinds of returns that they would want, especially in the environment that we're in.
And we know that, I mean, yes, these portfolios have been on the higher quality side, but the REITs are paying, you know, pretty high per bed and per unit prices. Cap rates have gotten aggressive. Do you think that's going to impact the rest of the market in terms of valuations and pricing, or is this just a complete healthcare REIT type phenomenon?
Well, it's an interesting question, and I think it will have an impact, but I don't believe it'll be as great as I think the rest of the industry would like it to be. I think there's going to be a bifurcation of quality and valuation that will take place, where the premier providers, the brand companies so-called, will benefit from the lower cap rates. And then I think, you know, you're going to have quite a drop-off when the transaction sizes get meaningfully smaller, under $100 million. Even $100 million, I'm not sure a $100 million deal moves the needle today for a $20 billion healthcare REIT.
18 months ago, $100 million was a very big transaction.
Yes, it was.
Now it has gone down to being on the small side, given what's been going on. But do you think, I mean, with the little guy out there, not even $100 million, the 10, 15, $5 million deal, are these REIT transactions going to make any difference in that area of the market?
Well, I believe in the premise that when liquidity gets created, which is what's happening here, you've got liquidity in the marketplace in the form of healthcare REITs. At the end of the day, there's a take out there that's attractive. You need volume, you need quality to get there. I think once you create that liquidity, I think the rest of the markets and the capital follow it. So I do believe it'll be beneficial to the whole industry. There will be some differentiating between the valuations due to size and certainly quality.
And for buyers with cash, and I assume you are still a buyer out there, you have liked this market the entire time you've been in there. You buy, you sell, you buy again, so you're never getting out. But for buyers with cash, what's the best opportunity right now? Is it turnarounds? Is it SNFs? Is it assisted living facilities? Where do you see the best opportunity to put your cash to work?
Well, I think there's several opportunities out there right now in the marketplace that are attractive, certainly from my perspective. I sort of come full circle. You know, my history has been to be primarily a real estate investor. We are now going to control one of the largest operating businesses in the skilled and rehabilitation spaces, the post-acute sector in the country. I like that. It comes with lots of risks and issues, but it has, in my mind, I think there's tremendous opportunities as we look to the future to filling the needs of delivering healthcare and services to our elderly population. And if you can provide business services around both a real estate and a service and ancillary and operating platform of quality, and from a technological standpoint and a quality of care standpoint, I think there is tremendous opportunity. That leads me to, I like the hospice business, I like the home care business, I like the rehab business. I like the operating businesses because you can buy them at a multiple, or at least I believe you can buy them at a multiple that I would consider to be reasonable, and it gives you the ability to create value. The real estate side of the equation now, creating value in that investment platform right now is for someone like ourselves is hard to recognize.
Really?
Yeah.
Okay. All right, well listen, congratulations again on your transaction. Hopefully we'll be closing in the next month or two, and we'll be looking forward to see what else comes down the pipe with you.
All right, thanks, Steve.
All right.